Well, a very good evening and thank you for joining us on India Business Hour. I'm Ashmit Kumar and here are the headlines that we're tracking at this hour. The World Economic Forum kicks off in Davos with fears of global recession looming large. IMF says international relationships are worsening after decades, warns that economic fragmentation could cut global economic output by up to 7%. India is seen as a bright spot by investors at Davos amidst a gloomy global growth outlook. Top Indian CEOs are upbeat about restarting the capex cycle, expect the government to continue with infrastructure spending ahead of the upcoming budget. As the world's rich and powerful gather at Davos, Oxfam warns of widening inequality. A new report shows the richest 1% have amassed nearly two-thirds of all global wealth created since the pandemic. The top 1% of India's population owns more than 40% of the country's wealth. Wholesale price inflation in India falls below 5%, the slowest pace of growth in the last 22 months. Fall in food prices was the key driver. India's trade deficit in December remains largely flat at nearly $24 billion. Exports and imports rise on a monthly basis but decline on a yearly basis. Sources say government is looking for alternate export markets like Brazil and Netherlands, among others, to boost exports. Union Law Minister Kiren Rijiju writes to the Chief Justice of India, Justice D.Y. Chandrachud, seeks a government representative in the collegium which appoints judges to higher courts. Opposition parties slam the move, calling it a poison pill for an independent judiciary. Law Minister hits back, says his letter is in conformity with the observations and directions of the Supreme Court Constitution Bench. Tech Mahindra C.P. Gurnani rules out any immediate announcement about his successor, says he will be in the saddle till the end of 2023, promises that margins will improve every quarter, but stops short of giving a guidance. Layoffs continue across startups. Dunzo fires 3% of its staff. ShareChat cuts 20% of its workforce. Rebel Foods lays off less than 2% of its employees. Viacom18 bags the rights to broadcast the inaugural edition of Women's Indian Premier League. Viacom18 will shell out nearly $117 million, which translates to more than 7 crore rupees for every match. Nepal observes a day of mourning after the worst aviation disaster in 3 decades that killed 68 people. Investigators find the black box and cockpit voice recorder of the Yeti Airlines plane that crashed yesterday. Russia and Belarus begin joint Air Force drills, sparking fears of a new offensive in Ukraine. Western intelligence officials say Moscow could use its ally to launch a new ground campaign. This even as Russia continues to pound cities in eastern Ukraine. Well, it's that time of the year when the world's rich and influential descend on the Swiss Alps in Davos for the annual gathering of the World Economic Forum. Now, more than 1,500 leaders, including 300 policymakers and 600 CEOs, are in attendance as fears of a global recession loom large. Now, the IMF has warned that global economic output could decline by up to 7% if international relations continue to deteriorate and economic fragmentation continues. India, meanwhile, is a bright spot, according to several economists and industry leaders at Davos. There is consensus that even a global recession should not throw a major spanner for India's growth momentum.
Economic globalization has helped lift 1 billion people out of poverty in the last 30 years. A pullback of that globalization is going to do long-term damage to the prospects of increasing everybody's living standards. So it's important that we come back to a kind of cooperation. And it's going to be a journey. It's not something that's going to change overnight, because leaders need to come out of this very short-term, insular, inward-looking, crisis-driven mindset that they've been in understandably, given the shocks that have been happening. But now it's time to start looking again at the medium term and start looking at cooperation.
China, surprisingly, decided COVID zero, maybe we're getting rid of it, and short term, that may lead to a boost to global growth. But I think underlying it's still very difficult, still continuing war in Ukraine and Russia, rising global interest rates, or at least high global interest rates because of inflation. I mentioned geopolitics. And I think China, although in the near term it may do well, everybody's been locked up and they want to go spend money. But I think longer term, China has a lot of problems. Their growth model had featured tons of construction, roads, bridges, apartment buildings, offices, like we haven't seen outside Spain and Ireland just before their collapse. Secondly, the centralization of power can't be good for growth. I mean, it was already centralized. And not only has President Xi centralized it more, he's gotten rid of a lot of the technocrats. China had some very good technocrats. He seems to have gotten rid of them.
Well, India has a huge presence at Davos this year. A 200-member-strong contingent is in Davos, led by Union Ministers Ashwini Vaishnav, Smriti Irani, and some of India's top business leaders. India's IT companies have set up their own pavilions, as they do every year. Amidst a cloudy scenario for global growth, India is seen as a bright spot. Speaking exclusively to Shireen Bhan, top Indian CEOs exuded confidence about the India story. They expect acceleration in foreign inflows and a higher capex by the private sector as we move forward in 2023.
Well, there's no question that India has been the most resilient major economy and looks to be doing better than the other big emerging markets. India also, for example, some of its exports are more resilient to supply chains. The tech sector has been very resilient in India. So, by and large, India seems to be resilient. Even if there is a recession, maybe it won't be as dramatic in India.
India, and I know that there's a lot of interest at this point in time, especially when we talk about what's happening in China, and then of course the manufacturing destinations that the world is looking at this point in time. One of the fastest growing large economies today. What's the mood like on India?
I remember when you and I spoke back in May, and we were bullish in India, and we frankly continue to be bullish.
The general feeling is that the worst is over. There's always a caveat, right? Because we do live in very uncertain times. Across other sectors, especially when I look at financial services, we continue to see hiring. There is a dramatic change, at least in financial services, happening because of the digitalization of financial services. Today, I know we ourselves will hire this year over 3,000 to 4,000 engineers in a financial services company, and we'll probably continue doing that the next 3 or 4 years. So I believe that outside of tech, you will see hiring continue. May not be very strong, as I said, the first couple of quarters, but thereafter you should see it growing.
No reason why India shouldn't be a big exporter of steel. India has the raw materials. When I look at our customer segments, if you look at automotive, they are back to where they were 4 years back. If you look at construction, it's quite strong. Industrial buildings, a lot of investments going on in supply chains, warehousing, a lot of investments in oil and gas. So all that will trigger private sector investment. So I think we are probably 6 months to 1 year away from getting private sector investment back.
I think we are going to see a new era that is going to come through. Also, I think the cycle, as Narendran was saying, the movement in which business is going to happen will be very rapid.
A cut in personal income tax only at the lower segment, we believe will help these people stretch their rupee a little bit more.
I don't anticipate, the government to be raising taxes.
Well, also speaking at Davos, C.P. Gurnani, the current managing director and CEO at Tech Mahindra, said that he will continue to be at the helm of the company till the end of the year. And when asked about the next CEO, he said that no immediate announcement will be made.
The communication to the stock exchange has been very clear that I am on the saddle till December 23, and the successor would be a CEO designate. There is no immediate announcement. So we will have to wait for a little while.
Well, meanwhile, as the world's rich and influential gather at Davos, Oxfam has released a new report showing how inequality is widening across the world. According to the report, the richest 1% of people have accounted for 2/3 of the new wealth created since the pandemic. The Oxfam report also claims that India's top 1% owned more than 40% of the country's total wealth. In fact, in 2021, the bottom 50% owned only 3% of India's wealth. Oxfam has suggested implementing progressive tax measures in budget this year. It has called for more taxes on the super-rich and proceeds from that to be used to raise India's healthcare budget to 2.5% of the GDP by 2025 and hike the education budget to 6% of the GDP.
The majority of this country at the moment is facing hardships. And while this is happening, you're looking at a very small bunch of people. And as our report says, that this is really becoming a country only for the rich. For every rupee earned by men in the last 1 year, women have earned only 63 paisa. Even an IMF is talking about the levels of inequality being unsustainable.
Well, on to the day's market action now. The Wall Street reversed the opening gains amidst volatility due to selling by foreign investors. Both Nifty and Sensex slipped 1% from the day's high, with bank and mid-cap index falling too. However, IT stocks managed to rise as major earnings flowed in. Some relief in wholesale prices. WPI inflation for December has softened to less than 5%. This is the first time the index has slipped below the 5% mark since February of 2021. Let's take a look at the internals. Inflation in food, vegetables, primary articles and manufacturing products softened in December. However, fuel, power, meat and potato inflation was marginally higher. Trade deficit in December is also flat. Lata Venkatesh now joins us with a quick roundup of all the macro numbers.
Yes, that's right. The wholesale price index for December has fallen to 4.9% and our CNBC-TV18 poll was 5.57%. November was 5.85%. So compared to the market, it is about 70 basis points lower. And compared to November, it's a full 100 basis points lower. This is largely because there's a huge fall in vegetable prices, about 22% month on month and 35% year on year. Other things, a little bit of fuel, because in fuel you don't count the excise duties when you count at the wholesale level. So petrol, diesel have also fallen and a lot of metals and basic metals have also fallen from year ago levels. The fall to 4.9 has led a lot of economists to believe now that the Reserve Bank could have a window of not hiking in February, because the CPI inflation for December also came in at 5.7, where there was widespread expectation of 5.9. Since both indices have come in lower than and substantially lower than expected, there is a window opening up that there could be a pause from the Monetary Policy Committee in February. But the bond market did not react. There was no rally out there because they are more worried about whether the market borrowing will be too overwhelming when the budget comes out on Feb 1st. Coming to the trade deficit, yes, the trade deficit at 23.7 billion is practically unchanged from the November figure, which was 23.8 billion. Now, I'm not comparing it with year ago December because commodity prices were much higher in 2021. So both imports and exports have fallen from year ago levels. If you take the merchandise, that is goods plus services, then again the deficit is 11.1 billion in December, 11.98 billion in December compared to 11.1 billion in November. Again flat. The rupee fell, not because of the trade deficit at all. The rupee has been falling because of relentless selling by foreign funds who are moving out of Indian equities into other Asian equity markets. And there is also a fear that the Reserve Bank does not want the rupee to appreciate and so it's buying dollars. Therefore, no rally in the bond or in the rupee market today, despite data meriting some kind of a rally.
Right, Lata, thanks a lot for that wrap of all the macro numbers. But speaking of macros, current account deficits spiking to 4.4% of the GDP in the second quarter and exports declining to 12% in December. The government is working on measures to boost exports to newer markets and to check imports of Chinese goods. Abhimanyu Sharma is now joining us with more on that. Abhimanyu, tell us, what are some of these measures that the government is looking at?
India is aiming to increase its exports to countries which are experiencing growth like Brazil. India is also looking to add more geographies to its export list, even as several key nations to which exports used to take place earlier are experiencing a slowdown. Hence, India is looking at other options to increase its exports. The possibility of a rise in electronic exports to Russia is also being looked at due to a huge demand for Indian electronics in the country. Government sources have indicated that under-invoicing and import of substandard goods from China continues to remain a cause of concern. Hence, action is being taken by the Customs and Revenue Department in this regard. As far as the availability of food is concerned and the review of export ban is there, the government is looking at domestic production, food stock and market availability before pushing for any food exports. All government departments are ensuring ample availability of wheat stock, and any clearance for export of wheat will only come after several government departments reach a consensus about ample domestic availability of wheat. Last year, the export of wheat was heavily regulated by the government after crops had failed in various parts of North India due to a severe heat wave. It remains to be seen what decision will be taken in this regard by the government.
Thanks a lot for that update, Abhimanyu. Now, layoffs continue to hit the startup space, from Ola, Dunzo to ShareChat, among others. Employees are receiving pink slips as companies reduce their costs. Shilpa Ranipeta now joins us with the latest. Shilpa, over to you.
The slew of layoffs that we saw in 2022 in the Indian startup ecosystem seems to have spilled into 2023 as well. In just the first 2 weeks of January, several companies have laid off employees. Now, Dunzo, for instance, laid off about 3% of its staff last week, and it has said that it is offering full support to the laid-off employees during this transition. Apart from that, there's also short video app ShareChat that also laid off about 20%, which is roughly 500 employees. And the company has said that this is because of several macroeconomic factors that has impacted cost and the availability of capital. This company too is offering support to employees in the form of extended health insurance cover, variable pay, among others. And the company is also aggressively optimizing its costs. Remember, it had also shut down its fantasy sports platform last month in December, where it had laid off about 115 employees. Then there's also food tech company Rebel Foods, which laid off about, the company says that it laid off only less than 2% of its staff, and this is on account of annual performance evaluation and the realigning of priorities for the company. Last week too, we saw a few other companies like Ola, which laid off nearly 200 employees in its engineering and design departments. Lead, with a tech startup, also laid off about 60% of its employees. Cashfree, a fintech startup, also laid off about 6 to 8% of its staff, which amounts to about roughly 80 employees. And Moglix also, which laid off about 2 to 3% of its staff. So clearly, it's not just the big tech globally that we're seeing. India's consumer tech companies are also feeling the pain of the global economic downturn. Back to you.
Well, with that, it's time now to slip into a very short break. But coming up on the other side, over 90% of the world's diamonds are cut and polished in Gujarat's Surat, with diamond demand slowing down. What does the industry expect from the union budget? A special report when we come back.